Before getting into the real estate stats for the GTA, which are probably the worst on record since probably the last 20 years, let's talk about the silver lining first because why not, right? There's tons of bad news out there. So let's talk about housing affordability. So this has been a topic that has been covered ad nauseum for probably the better part of the last 15 years. And affordability has gone out the window. Basically, starting in 2015, things really just kind of got out of hand, right? And that has to do with interest rates, immigration, a bunch of things. Here's the good news. As of today, as of the recording of this video, which is May 2025, housing affordability is now back on par to where it was back in, call it 2016, 17, 18, and 19, which is a great sign. And the way things are going right now, it's probably going to continue improving, especially in the condo sector. So that's the silver line. Here's a really good chart from our YouTube friend Tom Story. So this is how much affordability has changed just in the span of the last 12 months. This is due to two variables: price, so median price is down, and interest rates are down. Them going down in tandem. We went from $5,600 as a monthly payment if you were to buy the median house price last year, and the payment now for the exact same thing with today's median price, we're talking about $4,700. So that's a pretty material change. This is looking pretty good for affordability. Now, what's funny is we're actually entering an extreme buyer's market where deals are actually falling apart over the smallest things, like, $3,000 issues. People will walk away from a home, which completely doesn't make sense. But this is the complete inverse of an extreme seller's market where things used to sell that made absolutely no sense. Now you see deals that should be going through and people are just, they're pulling out because they're waiting for the next best thing or for the next desperate seller. So that is the silver lining. Now, this story for the market stats for the month of April and going forward is going to be a story of two things: detached homes and condos. We've talked about this before. I'll show you with a graphical example how dire things are on the condo side. All right, here he goes with the charts again. And I promise you we're going to stay on this maybe 30 seconds. Before your eyes glaze over, just hear me out here. The only thing to pay attention to is this dark blue line right here that's been progressing, and this dark purple line. Dark blue, detached homes, purple, condos. So put it to you this way. Here's the main takeaway. Typically, in a normal year, we'll have 10,000 detached homes for sale and maybe 3,800 to 4,000 condos for sale. So call it 10,000 and 4,000 in any given month. Here's where we are right now. We have 10,000 detached homes for sale, and we have also close to 10,000 condos for sale. So ultimately what this means is we have close to 3 times the amount of condos for sale than we do in a typical year. And this is what's skewing the stats to look as bad as they are right now, meaning median prices. So not so much median prices, but average prices are down substantially. Active inventory looks way higher than it is. So if you're thinking to yourself, well, can I sell my house? Detached house, York region, will I get a good price? Well, the market is actually not that bad. Sure, you can get a good deal here and there, but for the most part, if you're well presented, well marketed, and well prepped, you will sell for quote unquote market value, but we'll get into that in a little bit. But this is to show you how condos are skewing the overall stats substantially just by way of how many there are for sale right now. And this is only going to get worse in the coming months. For example, if you have a condo right now and you're thinking about selling now or next year, chances are sell now, cut your losses, because this is not going to look any better next year, because we have 30 to 40,000 more new units completing, getting finished, which is going to add to the inventory and to this price pressure that we're seeing. And when I say things are not looking good and these are some of the worst stats, here's basically where this is rearing its ugly head. I've said this in the past and the data backs it up. Typically in the spring market, despite the economy, despite things, no matter how bad they are, typically we have some semblance of a spring market. This even happened during the global financial crisis. Here is where we are right now in 2025. So by this time, in a regular year, prices are up, over 10% going into the spring. We're up only 2%. So ultimately the year has been flat. Nothing has happened. So if you compare prices from this time last year to now, we're down substantially. But if you look overall, the entire trend, we're trading flat. And going into May, I suspect, just like I said last month, we've tapped out price-wise. We're probably going to see further price decreases going into the summer. We're going to see, but if we've had this week of a spring market, I don't expect to see any sort of a rebound. And keep in mind, last fall, the fall in 2023, there were no fall markets. This year, probably going to be similar, where the fall market is going to be relatively weak. But again, as an individual looking to sell, you have to really consider your specific pocket. This is the GTA at large. So, if you're in a specific pocket in Markham or in Aurora or in, let's say, the east end of Toronto, completely different picture. Just generally, directionally, this is how things are looking right now for the market overall. Not good. And I suspect this is going to continue over the next 60 to 90 days. Now, I do want to share two anecdotes with you just to illustrate how this is actually playing out in the market right now as we speak. Last month, or even for the last 2 months, I've been pretty much saying that we're tapped out price-wise. We're not going to see the gains that we usually see. The writing was on the wall mostly because of active inventory and how many listings were expiring and then relisting. So two listings that I sold in the last 45 days, these two in particular stand out to me because we had direct comparisons where the neighbors sold right after us and how that impacted them because they're either not paying attention to the trends or they had their head buried in the sand. So one property, and I can't give you the addresses obviously for privacy reasons, but I'll give you one example. In York region, we sold for, call it $1.5 million. The expectation was maybe 1.6. We sold for 1.5. The sellers were aware, they're taking a bit of a haircut, but they were okay with it because their purchase and everything else kind of lined up. So the differential between what they were selling for and what they were buying for was working out. 5 doors down was an identical house, slightly different layout, that came on the market before us, ended up sitting for about 2 months, and then finally sold for $130,000 less than what we sold for. Now, there's a lot of things that go into this. There's presentation, there's expectations, there's managing the expectations of the seller, and then managing the buyers, follow-ups, all that good stuff that happens behind the scenes. But these are two identical houses in the exact same neighborhood, similar age, everything's pretty much the same. One obviously maybe put 5 to 10 grand in presentation, painting, prep, all that stuff, whereas the other one maybe did, but it didn't show. But this is where you have a differential of, almost 10% in price just by way of prep and managing expectations. If you come on the market early enough and then you start really high, you're not priced well, and then you're price reducing your way down, typically you're going to end up in a much worse net position by the time you sell 60 to 90 days. In the past, it was very easy to say, well, you know what, if I don't get my price, I'll just wait it out. And that was the strategy, and it always worked during a hot market because somebody else will come and pay you more money or give you your asking, and everybody was a genius. That is no longer the case, and that is not going to be the case for the foreseeable future. And you have to take that into consideration when you're selling. So you can posture, you can wait, you can do whatever. If you can wait and then relist next year, by all means do that. That may work. But if you actually need to sell in the next 3 to 6 months, posturing and trying to, squeeze out the most out of people at the expense of time and being on the market longer, not worth it. Another listing, and this is, again, two similar houses. This is now the neighbor right next door to us. We sold, let's call it, for $1 million. The neighbor came on the market and sold for $20,000 less than us. But the big difference here is we invested maybe 10 grand into this listing. Again, all presentation stuff. They put in about $80,000 worth of work coming on the market. And as an agent, the most common mistake I see is where sellers themselves decide what they're going to spend money on in terms of getting their houses ready, in terms of what they're going to fix, what they're not going to fix, what they're going to leave alone, what they're going to paint, how they're going to do it, and things like that. And I can tell you, probably majority of those decisions will not return even the dollar you spent. So for the $10,000 you put in, you're not going to get that back. Maybe you're going to get 20 cents on the dollar. And I don't know why agents don't collaborate with their sellers to explain the difference that these things make. This is a classic mistake where we sold for $20,000 more and we had put only $10,000 into the listing, whereas the other people sold for $20,000 less and they had put in about $80,000 worth of work. So the net difference between both sellers is about $100,000 of what they get after the house closes. Again, classic mistake, and this is not a mistake you want to be doing, especially in a down market. This is where experience really matters. You don't want to be coming on the market based on your understanding of what you think or what the neighbor is doing. No, you really need to take into consideration for your specific street, for your specific house, what is going to move the needle. And you don't want to overdo it. You're better off maybe spending less and getting a little bit less than throwing a bunch of money at a problem that you're not going to get that money back. So just something to leave you with for consideration if you're coming on the market, especially now when things are as slow as they are. If you're finding these breakdowns useful, please share the video, like it, and subscribe to the channel. This is kind of what gives me the feedback I need that you guys actually enjoy this stuff. Now, to the less important metrics, but the ones that get a lot of attention in the media, one of these is obviously super important, but let's talk about new listings. So new listings are as per seasonal norms. So we're expecting obviously more listings to come on the market. pretty much in line. Good news. And this is with all the condos that are coming right back on and are being relisted. I would have thought we're going to be much higher than where we are in terms of new listings, but we're actually trending in line. So that's great. The bad news, and I've been harping on this since forever, and this is ultimately the result as to why things are as slow as they are. If we're typically selling or transacting 9,300 homes, 9,300 properties in the month of April, and we only did 5,600, that is a massive departure. This is once again, we're entering into the zone where we're selling, 60 to 50% of the typical volume that we do. So that means most homes are just sitting unsold. And what I want to highlight is in January, December going into January, the spread was actually much closer. We had an issue last year where we were selling a lot less than seasonal norms. But towards December, the market was actually picking up. I know, believe it or not, into December, things were actually looking great. The issue became January was kind of so-so, and then it really hit the fan in February, where 51st state, tariffs, unemployment, auto sector, steel sector, aluminum, all that stuff that came out of the United States. And this is ultimately the result of all the rhetoric from the political side in terms of how it's impacted the real estate market. Once again, buyers got spooked and everybody's on the sidelines. There are a ton of people out there looking to buy, but you have to understand, as I've said this before, and I learned this from another really good agent, is that in Toronto, people are willing to pay more for a house knowing that other people want the exact same house. Meaning everybody else is waiting to see that other people want the same house, the same neighborhood, the same thing, and only then do they have the confidence to actually transact. Most people don't want to transact if they're the only ones while everybody else is standing by and watching. So this is kind of how you squeeze out the deals. There have been some fantastic deals coming out right now simply because there's so much inefficiency in pricing and inefficiency in how these listings are being handled. But this is definitely an issue. And the one thing that's giving me a bit of hope, we now have a new prime minister, and there's been a lot of good things have been said, and the actions seem to follow. So let's see. I'm remaining hopeful. Let's see what this new government does. But I feel that based on the prior government that we had, it really can only go up from here. So let's see. But I'm remaining hopeful. And this is where we broke pretty much all the records. So we're almost at 28,000 active listings. This is listings right now in the GTA. And again, most of this variance is due to condos, majority of it. A little bit is everything else. But let's say condos weren't an issue, we would be just a little bit above our seasonal trend. But here we are. We've broken all records. I think this is the highest on record in the last 20 years, or as far as I can see the data. Expect this to go up. We're going to break more active listings records next month, probably for the next few months, actually for the rest of this year, if I'm being honest. It's going to be driven by the condo sector. So if you have to sell a condo, I empathize with you. It is a very difficult sell right now. I tell people, if you can hang on and that, like for the next few years, just hang on to it. And if you can't, then cut your losses and move on.